Welcome to the Deep Dive. We are so glad you're joining us today. Now, just a heads up for you, while we were researching this topic, a couple of the web links we usually pull from actually hit some security walls, but we really struck gold with our primary source.
We really did. It's a highly comprehensive Q1 2026 earnings report straight from court.
Exactly. And the topic today is, well, it's an industrial giant operating right under our noses. We're looking at Badger Infrastructure Solutions Ltd. You can find them trading under the ticker BDGI.
Right, Badger. It's one of those companies that most people probably drive right past without a second thought.
Yeah, exactly. And our mission today is to uncover how a company that is essentially dealing in dirt and digging has somehow leveraged a highly specific, very niche technology to achieve these just record-breaking profits in Q1 2026.
It really is a masterclass, in how these supposedly unglamorous businesses often hide the most fascinating economic success stories.
Oh, 100%. The financials here just reveal so much about the booming North American infrastructure market right now. Because, usually when we think about heavy construction, there's this built-in expectation of just pure brute force.
Right, just massive machines.
Yeah, you picture these giant metal excavators, steel claws tearing into the earth, just moving mountains of dirt. It's loud, it's chaotic, and fundamentally, it's pretty imprecise.
It is. That's the traditional definition of heavy industry, right? You expect collateral damage just by the very nature of the mechanical tools you're using.
Exactly. Force is just inherently hard to control on a micro level. But then you step into the modern world of urban infrastructure.
Where things get much more complicated.
Very complicated. Suddenly, that brute force approach becomes a massive, multi-million-dollar liability. So before we can understand Badger's massive Q1 profits, we first have to understand the unique technology that generates them.
We do, because they aren't out there with standard backhoes.
No, they aren't. They're North America's largest provider of what's called non-destructive excavation. And instead of metal diggers, they use this thing called the Badger Hydrovac.
Right, which completely flips the script on how you move earth.
It really does. It's a system that uses a highly pressurized water stream to literally liquefy the soil, and then a vacuum system sucks that mud into a holding tank on the truck.
Which is crucial when you are digging around high-risk underground infrastructure. We are talking power lines, water mains, gas lines, communications.
Okay, let's unpack this, because I think a relatable analogy really helps here to visualize the tech. Imagine you're at the dentist.
Always a fun place to imagine.
Right. But think about it. If the dentist uses a metal drill, it's aggressive. But if they use a high-powered water pick to clean your teeth, it provides absolute precision and safety. Especially when you're working, just millimeters away from a highly sensitive nerve.
Oh, that is a perfect analogy. That hit the nail right on the head.
Thank you. In this case, those sensitive nerves are explosive gas lines or vital fiber optic cables.
Yeah, and to validate that analogy, it really explains why this matters so much economically. Water pressure can cut through compacted dirt, but when it hits the steel casing of a gas line, it just disperses.
It washes the dirt away safely.
Exactly. It doesn't penetrate the infrastructure. And you have to weigh that against the stakes of traditional excavation. Hitting an underground utility with a traditional metal backhoe, that can cause catastrophic safety events.
Explosions, fires, just worst-case scenario stuff.
Right. And even beyond the physical danger, it causes millions of dollars in damages. If you sever a city's fiber optic cable, you are shutting down internet, emergency services, banking. The Hydrovac solves this massive pain point for construction, utility, and transportation end markets.
It literally removes the nightmare scenario from the equation. So now that we understand the immense value of this safer digging method, let's look at how that translated into Badger's record-breaking Q1 2026. Because the numbers in this report are just staggering.
They really are.
Q1 revenue hit a record $203.2 million. That is an 18% jump from Q1 2025.
An 18% jump for an industrial company in a single quarter is massive.
It's huge. And their adjusted EBITDA reached $38.1 million, which is up 13%. But get this, out of that $200 million pie, the Hydrovac services alone brought in $194.3 million.
So it's the absolute engine of the company.
It is. But I want to pause for a second because there is a very specific, slightly obscure metric from the report that I want to ask you about. RPT.
Ah, yes, RPT.
Which stands for Revenue Per Truck Per Month. The report notes RPT rose 11% to $39,009. Why focus on revenue per truck? Isn't overall revenue enough to show they're doing well? Is RPT basically the industrial equivalent of a restaurant tracking, like revenue per table?
What's fascinating here is that you're exactly right. The restaurant analogy is spot on. RPT is the ultimate measure of utilization.
Utilization, right?
Because think about it, if a restaurant just adds 50 more tables but they sit empty, total revenue might tick up slightly, but the business isn't actually healthier.
Right, you just have a bunch of empty tables taking up space.
Exactly. So for Badger, an RPT of almost $40,000 proves the company isn't just buying more trucks to artificially inflate their top-line revenue.
I see.
Instead, customer demand is so extraordinarily high that every single existing truck in the fleet is working harder. Every unit is generating significantly more cash than it did last year.
Wow, almost 40,000 a month per truck. That's incredible.
It is. It's pure organic demand pulling the services out of the company.
Okay, so because every truck is generating almost 40 grand a month naturally, Badger wants to build a lot more of them.
Obviously, you want to scale that up.
Right. CEO Rob Blackadar announced they are pushing their 2026 new truck builds to the absolute upper end of their guidance.
Which is a huge commitment.
Yeah, they are aiming for 270 to 310 new units this year alone.
That's practically a new truck rolling out every day.
It is. But doing so in 2026 comes with this massive, multi-million-dollar macroeconomic roadblock. Here's where it gets really interesting.
The tariffs.
Yes. The planned capital spend for 2026 is between $198 million to $230 million. But a whopping $18 million to $30 million of that is just to cover expected potential tariffs.
That is a staggering slice of the pie just going to tariffs.
It's shocking. For a single company to have to swallow up to $30 million in pure tariff costs. Specifically, the report calls out Section 232 tariffs implemented by the U.S. in Q4 of 2025. These slapped a 25% penalty on non-U.S. content for heavy-duty trucks crossing from Canada to the U.S.
And before we dive into the mechanics of that, we should probably clarify our stance here.
Oh, absolutely. I want to be incredibly explicit with you listening right now. We are not taking any political stance here on left-wing or right-wing trade policy issues.
Completely impartial.
Exactly. We are merely analyzing the objective financial ripple effects that these cross-border tariffs have on a Canadian company operating in North America. We're just looking at the math on their balance sheet.
And if we connect this to the bigger picture, the math is complex because a hydrovac truck is a highly complicated assembly.
It's not just a metal box on wheels.
No, not at all. You have high-pressure pumps, vacuum blowers, electronic systems. Even if Badger fully assembles the truck in Canada, Section 232 targets the specific internal components.
So if a specialized valve was imported from Europe, it gets hit.
Exactly. It gets penalized when the whole truck crosses into the U.S. to join a local branch. A 25% tax on the non-compliant portion of a $500,000 truck adds up to $30 million incredibly fast.
So how do they mitigate this? I mean, $30 million is a massive hit.
They rely heavily on their vertically integrated manufacturing plant.
Meaning they build the trucks themselves?
Right. They own the assembly line. So they possess the engineering flexibility to adjust their own supply chains. If a specific imported pump triggers a huge tariff, their internal teams can source a U.S.-compliant alternative and swap it out.
Way faster than a competitor who has to buy their trucks from a third-party builder.
Much faster. Plus, they have established pricing programs. Their market share is so large, and their service is essentially mandated by insurance companies that they have pricing power. They can socialize those tariff costs across their customer base.
Because paying a slightly higher rate for a Badger truck is still cheaper than paying for an exploded gas main.
Exactly. It's a risk mitigation premium.
Okay, so despite these hefty tariff penalties, Badger isn't retreating at all. Instead, they're leveraging their Q1 momentum to aggressively expand their service footprint and reward the people holding their stock.
They are really going on the offensive.
Yeah, the report says Badger is spending $15 million to $25 million in 2026 to launch 2 entirely new service lines to complement the core hydrovac business.
Which is really smart.
Right. Utilizing combo trucks, sewer and flusher units, air vacs.
So once they are on a job site for a hydrovac job, they can offer all these other specialized services to the same client, capture more revenue.
Brilliant. They're also rolling out this operational excellence program through 2027 to boost branch profitability, like standardizing processes across all their locations.
Squeezing out inefficiency.
Exactly. And meanwhile, they are heavily rewarding shareholders. They repurchased over 47,000 shares in Q1.
At an average of CAD $63.27, I believe.
That's the number. And they approved a quarterly dividend of CAD 19.5 cents per share, all while keeping their total debt to compliance EBITDA ratio strictly between 1.0x and 2.0x. Right now, it's around 1.5x. So what does this all mean? How do you simultaneously build 300 trucks, launch 2 new businesses, pay tariffs, and hand out dividends without going into massive debt?
It is really a masterclass in disciplined capital allocation. They are funding this massive expansion largely through the sheer cash flow generated by that incredibly high operational utilization we talked about earlier.
The RPT. The
Mhm.
trucks working right now are paying for the trucks of tomorrow.
Exactly. But this raises an important question for you listening. Think about the logistical challenge behind this kind of physical growth.
Oh, the human element.
Right. To run 300 new trucks, you need 300 highly trained operators.
Yeah, you can't just hand the keys to a $500,000 water vacuum to someone off the street.
No, you absolutely cannot. It requires a deep understanding of soil dynamics, utility maps, high-pressure calibrations. A mistake could literally blow up the infrastructure they are hired to protect.
The report specifically mentions accelerating the rate of hiring and training as a critical piece of this puzzle, doesn't it?
It does. It explicitly calls out human capital as the true bottleneck. A competitor might be able to buy 300 trucks, but they can't magically conjure 300 safety-certified operators overnight.
That is a massive competitive moat.
It's the ultimate governor of growth in this industry. Badger's ability to systematically train these operators is just as critical as their manufacturing plant.
So to bring this deep dive full circle for you, Badger Infrastructure Solutions took a brilliant, simple concept, right? Using pressurized water to safely dig holes.
It sounds so basic when you say it like that.
It does. But they took that and turned it into a $200+ million quarter.
It's incredible execution.
It really is. We've seen the importance of tracking utilization metrics like RPT, the harsh reality of navigating international tariffs, and just the sheer power of disciplined capital expansion.
They are essentially engineering a highly profitable solution to the physical risks of modern infrastructure.
Absolutely. So I want to leave you with a new lens through which to view your daily commute.
Ooh, I like this.
Yeah, next time you see a construction site near a busy road, look closely at the equipment they are using. Are they using a traditional risky metal bucket or a high-tech water vacuum?
It's a totally different approach to the earth.
It is. And it makes you wonder how many other highly specialized, entirely invisible technologies are quietly powering the multi-billion-dollar infrastructure of our modern world, completely unnoticed by the average passerby.
There's a whole world hiding in plain sight.
It really is. Thank you so much for joining us on this deep dive. We'll catch you on the next one.